Hi everyone, I'm Mirela Ciobanu, Senior Editor with the Paypers, and today I'm joined by Rhian Lewis, who is the author of Cryptocurrency Revolution. I have heard the book, and also I have read it because, this is the book that actually taught me a lot about the crypto industry, and I loved it because using common language explained the tokens and the blockchain in not so scary terms. Also, another thing that I loved about your book, Rhian, and thank you for accepting an interview with us, is the fact that you stress more on these developments, on their importance for our financial industry. Also, I loved because in the book I found so many resources about blockchains, tokens, CBDCs, concepts that helped me draft some of the content for our upcoming crypto report to be launched in November. So stay tuned. And without further ado, Rhian, thank you so much for accepting an interview with us.
Thank you. I'm really delighted to be here. Thank you so much for asking me. And I'm thrilled that you found the book useful.
Yeah. So first, let's find out who is Rhian Lewis for those who do not know it yet.
Well, I do lots of different things. Most of them have a focus on cryptocurrency and blockchain technology. I'm a software engineer by trade, but many years ago I used to be a journalist. So I'm very interested in this intersection of where writing and communication meets technology, explaining complex technological and financial concepts in simple language is something that's really important to me. So at the moment, I am working primarily as a developer relations consultant for a Web3 company called Boson Protocol, but I also work for different clients in the cryptocurrency space, and also try to focus on as much of my writing as I can.
Yeah, in a way, you kind of anticipated my next question, because I wanted to learn what inspired you to write the Cryptocurrency Revolution. And I have a hint that is this intersection between writing, explaining, and technology to make it,
Absolutely. I mean, apart from the general matter of wanting to communicate these concepts to as many people as possible, a lot of this arose because I used to run, starting in 2014, a meetup group called London Women in Bitcoin. And through that, I met a lot of people, mainly women, who were very new to the concept of cryptocurrency, and people would ask the same questions. You know, I'd find that when people came along, they would generally ask the same sorts of questions, and that made me think that there has to be a gap in the market for something that people could read that would answer some of these questions. And of course, writing a book is in many ways the worst thing to do because books become out of date quickly. So I tried to stick to basic principles. And while although the book was published in 2020 and developments have since overtaken some of what's written there, I hope that the foundational principles in it are enough to answer some of the questions. There was also a certain amount of enthusiasm within me to explain basic financial concepts to people, because often people don't really think about money, what money is, where it came from, and so on. So that was also part of my drive behind writing the book.
Yeah, and you mentioned this fact that sometimes, information goes out of date, and this implies the speed with which innovation and technology works. I like that in your book you mentioned that cryptocurrency years are like dog years, suggesting this speed of innovation. And if we are looking back at the beginnings of Bitcoin, of crypto, how has this space evolved, and what about its main actors? What has it changed?
There's been a huge change. And in fact, this really came home to me this week. I was at a conference in London on Monday, which was primarily it was a fintech conference. And it was very much aimed at people working within the financial and banking sectors. It was specifically about crypto. And that's something that 10 years ago, or even 6, 7 years ago, you wouldn't really have seen. The ecosystem then was more around developers, early adopters, enthusiasts, and so on. And although we were starting to see the beginnings of institutional interest in cryptocurrencies, we certainly didn't see the huge numbers of people working within finance whose companies are integrating with cryptocurrency networks. Or you mentioned CBDCs before, central bank digital currencies. At the conference I spoke at, there was actually a former minister of the UK government who was doing one of the first talks. And at the time when I first became involved in cryptocurrency, you didn't really have any politicians who knew what it was, let alone who would turn up at a conference like this and talk about the importance of fostering a crypto-friendly economy. So there has been a huge turnaround.
Yeah, and regarding fostering a crypto-friendly economy, but here is more like fostering our financial system. In your book, you stress a lot on the importance of decentralization and tokenization to the advancement of our financial system. Can you, tell us why they are so important in your vision?
In my opinion, and the opinion of various other people, decentralization brings resilience. We have one of the things I focus on in the book is the dangers of the financial system being overly centralized when too much power or too much risk is put in the hands of different institutions, and where only particular institutions are permitted to engage with the financial system. I feel that decentralization can be helpful in lots of ways. First of all, by adding resilience, because it means that not all risk is necessarily in one place, and also by helping foster financial inclusion. A lot of people talk about cryptocurrencies as being low-cost ways to engage people in the digital banking sector or the digital money sector who aren't currently empowered. There are still more than 1 billion people in the world who are unbanked. And even in an economy like the UK, we have people here who don't have digital bank accounts. So the low-cost, frictionless transactions that decentralization can offer can really assist in this process of opening up different financial applications and ways to send money digitally, which we need in the modern world and from which so many people are excluded.
So besides financial inclusion, what other use cases do you envisage for crypto payments? I mean, so are crypto payments going to make a dent in our life? We can also focus here on the B2C aspect and also B2B. So besides financial inclusion, now we switch the ball in the users side, not only authorities and government.
Yes, now that's such an interesting question, because within the digital payment space, there is, if you listen to people talking about central bank digital currencies, one of the things that people talk about a lot is this idea of programmable money, of payments and use cases which don't really exist now, like, for example, being able to give people money that can only be used to pay for specific things or which expires after a certain point. And my argument would be that while these can be really beneficial in lots of ways, for example, you can imagine being a parent who has teenage children and perhaps you want to give them digital pocket money, but they're only allowed to spend it on particular things. That could potentially be very useful, but in the hands of government, it can be very dangerous, because you could, for example, have a situation where your government didn't want you to buy particular books, or there might be legitimate reasons why governments might not want people to spend money on things that are illegal. But when the power is all in the hands of one group of people saying that you can or can't buy this, then central bank digital currencies become quite problematic. However, different cryptocurrency payment solutions are able to provide the same level of programmability without the overarching power. So you can have really interesting use cases like that. And things like, for example, financial streaming. Now, we don't talk a lot in banking terms about streamed payments, but it's actually super interesting, because if you take, for example, somebody who receives a salary once a month, and they're normally paid, or at least in the UK, it tends to be with monthly payments where you get paid 4 weeks in arrears and maybe 1 week in advance, or 3 weeks in arrears, 1 week in advance, or some companies pay entirely 4 weeks in arrears. So you have to work for 4 weeks before you get your payment. Streamed payments enable people to be paid while they're working, by the day, by the hour, by the minute, if you like, because of the frictionless costs, because of the lack of friction and the fact that you're not having to pay people to make these payments. It's much easier to set up something like a smart contract that is entirely automated. So I think financial streaming is really important. And also, we've been in a very low interest environment for a long time. So being able to earn yield in a way that's not just dependent on having banks decide that they're going to pay you a particular interest rate, but where you can use different crypto protocols, decentralized finance protocols to put your money to work and earn yields for you. I think from a consumer's point of view, those are just two examples of ways where payments become more than just payments. They become like payments with superpowers.
And if we are to focus a bit on e-commerce, on merchants, what use cases do you envisage there? Maybe subscriptions?
Subscriptions, definitely, loyalty schemes and so on. But also, if you think about, for example, the development of the metaverse. Now, I know that this is a very, very early concept at the moment. It's a little bit like talking about the internet in the 1990s. But the metaverse is going to need payment networks that are fully global, fully digitally native, and cryptocurrencies kind of fulfill this brief in a way that at the moment our national banking systems don't, because from, this isn't my quote, I picked it up from a really brilliant fintech writer called Simon Taylor. He talks about the difference between payments that are digital and digitized, and global and globalized. And his whole premise is that the world banking system at the moment started out as an analog system that has that was very within national borders. So it's become globalized, but it's not truly global. And in the same way, it's an analog system that has been digitized. It was never natively digital. So you have something like the metaverse, where people are going to be congregating and buying and selling in a very global world. And you really need a natively global, natively digital system to enable those kinds of payments.
And since we talked about payments, so far, I think that cryptocurrency still needs to work a bit on the so-called blockchain trilemma, how to solve scalability, security, and decentralization part. And one of the ways that enable merchants accept payments are using Lightning networks or level or layer 2 blockchains. Can you please explain a bit the importance of the Lightning network? Here I'm taking advantage also of your software engineering background.
The Lightning Network and other layer 2 solutions, such as the Lightning Network is for Bitcoin, but for Ethereum, you have layer 2 solutions like Polygon, Arbitrum, Optimism. They work in different ways, but the principle is the same, because the number of transactions that can be put through on a blockchain network is famously a very small number compared with payment systems such as Visa. You mentioned the trilemma. You don't want to get away from having security. So the question is, how can you scale up the very small number of transactions per second to something that enables these networks to act like in the same scalable way as traditional networks? So the answer to that is to have transactions not happening on the main blockchain. So with Lightning, for example, the transactions actually happen off-chain, but every so often the transactions become batched and then validated on the main chain. That's a very generic way to explain it. And as I say, they all work in slightly different ways. But the idea is that for speed and scalability, you don't register the absolute entirety of every transaction at the time it's transacted. It's slightly more like a traditional payment network in the way that transactions get settled post-purchase or post-sale or whatever. But you still benefit from having the security of a blockchain, because the transactions, when they're grouped and validated all together, they still benefit from the same mathematical security that a main blockchain offers. I'm sorry, that's a very I should have practiced running through that layer 2 definition before. I hope it made sense.
No, it absolutely made sense. And you mentioned it is going to still remain secure. What about the anonymity aspect and the open source? Because these were some of the initial, praised benefits of Bitcoin blockchain.
Yes, now I think it's really important to talk about anonymity, because in fact, people use anonymity as a catch-all phrase, but what networks like Bitcoin and Ethereum are really, they're pseudonymous rather than anonymous. Okay. So in reality, because of the prevalence of blockchain forensic services like Chainalysis and so on, it's actually very easy ultimately for regulators and law enforcement agencies and whatever to put together quite a detailed picture of who is transacting what and when. Because one of the things that you have to remember is that usually people don't just indefinitely accumulate cryptocurrency and leave it in a blockchain wallet. They generally want some kind of off-ramp, either into fiat currency or into goods such as property or whatever. So it's actually ultimately, even if not at the time, but after the fact, we've seen this quite frequently with law enforcement agencies, very able to follow up on illicit transactions, simply because it might not seem as straightforward as somebody transfers a sum of money from one bank account into another. But with the evolution of these investigative techniques, people don't remain anonymous forever. And in fact, it's relatively, if you were looking to remain completely anonymous and make a payment, actually using physical cash is still a much more anonymous way of transacting than using a blockchain-based currency, because it's a permanent record.
Yeah. So you mentioned about this aspect of follow-up on illicit transaction, because crypto is pseudo anonym. I was thinking, because you also mentioned at some point about CBDCs via features like programmability. The state, the governments could have more like control over their payment system, citizens. How do you see CBDCs as payment instrument, or what's your stance on
I think it very much depends on their implementation. I was listening to a very interesting panel at this conference on Monday about CBDCs, and one of the there are different people from the crypto industry who are participating in focus groups and research groups and so on in different countries around the world, helping advise on this. And one of the necessary things that people are really stressing the need for is a certain level of anonymity, so that it just doesn't become a huge data pool of information about you, because at the moment, obviously, you have information via your bank that the government could specifically request, that you went to such and such a shop on such and such a date. But at the moment, that's not all feeding into a government-owned data lake about you that they can use. But if you think, for example, of things like state-supported health insurance schemes, if you had a CBDC wallet where there was no privacy whatsoever, governments could quite easily, for example, see that you had gone to a shop, that you had bought cake or alcohol or these things, and they could price your risk accordingly. And some people in government might say, hey, that's a great idea, we can cut down on our health costs by encouraging good behavior via nudges. Because once data's there, it's a genie that it's very difficult to put back inside the bottle. And you also have, I don't know, things that potentially make money a lot less like money. For example, with the Chinese CBDC, which is probably the most evolved live implementation there is, they have an ability to issue money that expires. So, for example, if you wanted to boost the economy in a particular way, or for a particular sector, so that you didn't want people to just, if you gave people, for example, a tax refund to stimulate demand in the economy, instead of having that as a tax refund or something like that people could choose to save it, you could actually have, you can only spend this on certain consumer items, or this expires on a particular date if you don't spend it. And it's funny, because you can see from an economist's point of view that they would see these as very useful tools, but it's very much an encroachment on people's civil liberties and human rights. So it's a very, very difficult path to tread, taking apart the potentially useful things of CBDCs, but saying, actually, no, we shouldn't do this for ethical reasons.
So there are many parties with different agendas involved, and it's difficult to see who will have priority, and would be bad to see some not so favor for end consumers agenda taking first place. So then crypto is a better replacement for CBDCs. I mean, to build the rails for Web3 payments and the metaverse. Or what do you think? How to balance what is happening? I mean, in terms of digital development, in terms of technology development in the payments industry.
I think it's a very interesting question, and the reality is probably somewhere in the middle of the two
Yeah.
extremes. Like, I can imagine that many politicians and many people working within banking would feel that CBDCs would do everything that needs to be done. At the other end of the scale, you probably have people working in Web3 who say there should not be any CBDCs. I foresee that the future is going to be this interlocking world where there are CBDCs, where there are private digital currencies, maybe like an Amazon coin or a Walmart coin or whatever. And there are decentralized cryptocurrencies with people using them at different points for different purposes, but all being entirely interoperable. Because at the moment, you don't really have this interoperability. It's as if the crypto sector is kind of over there and the banking sector is over there. And although the intersection points are being very rapidly developed, and you're starting to get things like, for example, I don't know, PayPal wallets and different fintech wallets where you can easily change between cryptos and fiat currencies. The exchange rates are usually quite high and there are different conditions around it. I do see a future where things become a lot more interoperable and you might have a digital wallet that contains many different things, CBDCs, cryptocurrencies, maybe NFTs that signify your membership of loyalty schemes and subscriptions and so on, with everything being in one wallet. I think that probably is the future, and it's not going to be something that's either or.
Okay, I see. And since you mentioned that now they aren't interoperable, this system, but yeah, the tendency is to become. Do you have plans for a new book? Because you also shared some visionary ideas on how we can play with CBDCs and how we can play with crypto applications. So as I mentioned, any plans?
It's funny you should mention that because, and we didn't discuss it beforehand, but I actually sent my next book to the publisher 2 weeks ago. So I have a new book coming out
Oh,
early
that's
next
nice.
year. Yes, yeah. I have a new book coming out next year, which is called Understanding Decentralized Finance, and it's due out next April with the same publisher.
Oh, congrats! I look forward to reading it. It seems like it's a level up. It's an upgrade to my knowledge on on this space because this is the ultimate point of this journey, decentralization, DeFi. Yeah,
I'll make sure I send you a copy.
yeah. So thank you, Rhian, once again for making time and sharing with us so many food for thought ideas and info regarding Bitcoin, crypto. I mean, not mostly, it's blockchain and crypto and CBDCs. And looking forward to continue our discussion. A follow up when you launch the decentralization book.
Thank you so much for interviewing me. I really appreciate it. It's been lovely chatting.